The world's first news OTT, News 9 Plus. Download now.
Hello, good afternoon. You're watching Last Take. I'm Shweta Kothari. You're with us here on News 9 with me, Suyash Maheshwari. Suyash, good afternoon.
Good afternoon, Shweta.
Let's quickly run our viewers through markets. Markets on a rally today. Nifty ending almost 1% up.
Yes, Shweta. Big day and a big rally that we saw after, the investors came back off from Diwali holidays. Now, Indian markets closed over 1% higher in today's trade, with the last tick for Nifty coming in at 19,675 mark. Now, I think what was more impressive was the fact that, after a gap up opening, usually, at least in the recent past, what we have seen is that market tends to give up those early gains. But this was not the case today. Markets not only held on to those opening gains, but also managed to build onto that.
Right.
And Nifty, closed almost near its day's high. I think about 17, 18 points shy of its day's high. And as you can see, Sensex also rallied by about 1.14%. by about 742 points or so, and closed above the 65,600 mark. Again, we have not seen these kind of levels in almost a month now. A special shout out to the broader markets, the Nifty Mid Cap 100 and the Small Cap 100, which have shown resilience in the face of volatility. I want to point out the Nifty Mid Cap 100. The Nifty Mid Cap 100 has been on a 9-day winning streak, and it has reclaimed that 41,000 mark for the first time since mid-September. Now the index is just about 280 points shy of its all-time high levels. So, I mean, considering what the experts are saying, perhaps Nifty Mid-Cap could be the next index to hit that all-time high mark. Nifty Small Cap 100 on the other hand ended 1.32% lower, just about 18-19 points shy of its all-time high, which was at around 13,808 mark. Volatility also slipped in today's trade. India VIX was down by about 0.5% and India VIX settled at around 11.14%.
All right, and before we delve into what's leading to the broader markets rally, what is the reason for the bull run today?
Certainly, Shweta. So the overall sentiment for global equities has turned kind of, there's a risk on sentiment in global equities. I mean, yesterday on Tuesday's trade, we saw Dow Jones scaling, moving about 500 points higher, its best run since, April of 2023. In November alone, Shweta, Dow is up by about 5%. Nasdaq is up about 10%. So there's a clear risk on sentiment in the market. And yesterday's run-up was on the back of a lower than expected headline inflation print in the US. So US CPI for the month of October came in at 3.2%, which was significantly lower than what the market had pegged. Now, this has further reaffirmed the talks that US Federal Reserve will perhaps not go for another rate hike. So that's why we also saw a softening in the 10-year bond yields, which have slipped to their lowest level since late September. And at 4.46, they are about 60 to 65 points shy of the all-time high, the 16-year high of about 5.02% or so. The softening of bond yields has also triggered a profit booking in the dollar index, which has slipped to 104 sort of levels. This again is for the first time, 104 sort of levels is for the first time we have seen in nearly 2 months. So overall, the setup globally looks constructive. Coming back home, retail inflation print for India also came
down,
yes,
under 5%.
4-month low, and the core inflation at 4.2% was much lower than what the street was expecting. So I think all in all, the setup from both domestic as well as global standpoint looks very constructive for equity markets.
All right, constructive and both domestically as well as internationally. UK inflation numbers also came in under 5% at a 2-year low. So overall, globally, I think positive sentiments emerging not just from the US but also from Europe at this point in time. A fear of recession that we keep talking about looming large, especially in Europe, may be happening, may not be happening, but US is far from it.
Yes, I mean, if you look at the European markets, Stoxx 600, which is pretty much a proxy for, the entire European market, rallied by about 1.34%. We have not seen this kind of returns in the last 4-5 months or so. And I was also reading some of the reports from some global brokerages such as your UBS, which expects Europe to maybe dodge recession fears. However, UBS also expects US to perhaps sink into reflation by the second quarter or so. So a bit of conflicting reports that we are hearing from UBS, but yeah, I mean European markets look well positioned.
Present numbers look good. Also, let's come back to Indian markets. Let's talk about the broader markets that have continued to outperform. I remember both of us sitting here speaking to analysts days on days, and they say be wary of small cap. Would that continue to be a position at this point where small caps have really outperformed headliners for a while now, for days on days?
I mean, that's what traditional wisdom will tell you, right? Whenever volatility hits the market, the broader markets are the first to correct. But again, not this time around. Nifty small cap was the sharpest to fall in that October 16 to October 26 decline we saw. It corrected by about 7%. But it almost saw a V-shaped recovery, and between the three indices, Nifty Mid Cap 100 and Nifty Small Cap 100, it was the first to touch the all-time high levels. And I mean, you see the movement in small cap stocks in the last 1 week or so. Continuously we have scaled all-time high levels. On Monday also we closed at a all-time high on a closing basis. Even today Nifty Small Cap 100 has hit another all-time high of about I think 13,808 sort of levels.
Challenging the traditional wisdom there as far as broader markets is concerned. But let's quickly also go back to some of the sectors that we are tracking. IT, realty, banking sector continue to be on radar.
Yes, Shweta. So as far as sectoral indices are concerned, it was a sea of green. All sectors pretty much on NSE ended today's trade in the green. Let's first talk about the Nifty banking pack. It's been a relative laggard in 2023. However, since November, it has outperformed Nifty. Nifty is up about 2.8 to 2.9%. Nifty Bank, on the other hand, is up 3.5%. Even in today's trade, we have rescaled that 44,000 mark for the first time in nearly a month and a half, and even managed to close significantly above it at 44,200 levels. So even if you look at the results from the banking pack, they have been great. Provisions have come down, which of course is a curious case, but overall, as far as net interest income, which was expected to take a hit because of ICRR and a high interest environment, was not hit as much as the street was expecting. So overall the results were good, and now we are seeing some sort of a movement in both private banks as well as your public sector banks. And a word on private banks, HDFC Bank in today's trade ended almost 1% higher. Other your private sector banks also performed fairly well. So finally we are seeing some sort of a performance pick up in those private sector banks as well.
All right, so NIMs have been good, results have been good, and Nifty Bank there continuing to not underperform, at least be in some semblance with the markets.
Yes. Another sector that I think we need to talk about, another laggard, so to say, was the IT pack. Nifty IT rallied almost, I think, over 2% in today's trade. It was among the best performing sectors. Nifty IT was up 2.6%. Now, this again was on the back of the recent alleviation in concerns about inflation. As I mentioned, that inflation print in US for the month of October came in lower than expected. Now this again reaffirms the thought that Federal Reserve might not go for another rate hike. Now, as we know, IT sector is highly exposed to the US markets. So if there is a high interest rate regime in the US, the cost of borrowing for American businesses would be high. So perhaps they would not focus much on discretionary spending and rather focus on their core businesses. Now, with the expectation that interest rates are expected to go down in the perhaps by the second quarter of by FY25, the discretionary spending is expected to pick up again. And given the correction that we have seen in some of these IT stocks, Shweta, I think the valuations are also looking reasonable. At least that's what I'm picking up from the experts that we have been talking here.
All right, may not be a washout here after all.
I mean, I don't know if if
there's going to be an
demand
immediate
will
impact
come back right away, but 2025 at least so far looks secure.
All right, 2025 looks secure. Let's talk about metals. There's been a news trigger this morning by the way of government opening up bidding for rare minerals the block auction will perhaps start in next 2 weeks. That has had a positive impact largely on the metal pack.
That and also a softening in the dollar index. You know, there is an inverse. I mean, the relationship, generally speaking, is very complex between dollar and the commodity prices. But in simple economics terms, there is an inverse relationship between commodity prices and your dollar index. So whenever there is a correction in dollar, whenever you know, the US dollar weakens, we see a run up in commodity price, and that's what played out. I mean, the dollar index slipped to a 2-month low in yesterday's trade, and it's around 104 sort of levels. So this has and given the fact that most commodities are priced in dollars, you know, buying these commodities becomes more expensive. So that's why we are seeing a good bit of a run up in you know, in metal pack. Another, I am also reading reports that perhaps China could go for a big stimulus package, so demand could pick up from there, and you know, as we know, they are the biggest consumers of metal, so perhaps that's also leading to some bit of a rally in the metal pack.
All right, and all you know, major metals companies there, Hindalco up 3.72%, Tata Steel 2.56%, and the Jindal Steel up at 1.77%. That of course is the metal pack, but Realty also continues to be an outperformer. A story I think has baffled a lot of people. What's happening with the real estate sector there? There's of course higher demand. There is a premium that people are ready to pay to own more than one property, but you know, Realty stocks on a rally for a while now.
What a rally that too, Shweta. I mean, Nifty Realty year to date is up almost 56% or so. I think on NSE it is the best performing sector so far this year. And let's talk about today's run. I think one of the reasons why Nifty Realty saw another 2% rally in today's trade was on the back of a softer inflation print for India. So what these sectors are very rate sensitive. So perhaps RBI going for a rate cut in the near future would bode well for the mortgage prices, as that would perhaps go, you know, augur well for the demand also. Also, there is a pent up demand for the housing sector. The housing sector is seeing some sort of a structural revival. It's moving from unorganized to organized, and which is benefiting these larger players, which are able to, you know, increase their market share. So all in all, things are looking really positive for the
consolidation in the real estate market.
Of course, and as we were talking about, you know, affordable housing as well as premium housing prices going up. I think 20-25%. The ANAROG report suggesting not very long ago
for both premium as well as affordable. So prices going up across the spectrum,
and that's in cities which thereby were you know, declared as ghost towns of India. I'm talking about Noida, and the report from Wall Street Journal, which suggested that, you know, the housing demand is not there while supply has exceeded, you know, the current supply. But that we are seeing a complete reversal in the last couple of years.
Absolutely reversal in that trend. And with that, also let's quickly take a look at some of the top gainers and losers for today.
Yes, Shweta. So among the top gainers in today's trade was Eicher Motors. The stock hit a new 52-week high of 3,848 rupees. It's just about 1% shy of its all-time high levels of around 3,889 rupees recorded in November of last year. Now the stock has been on a run-up since its Q2 results, which by the way did beat the expectations. Since the results came out, the stock has rallied nearly 8.5%. Post earnings, you know, I was reading some of the brokerage reports on Eicher Motors. Jefferies has maintained a buy call on Eicher Motors with a target price of 4,650, which implies an upside of nearly 20% from the current levels. Axis Direct also has a buy call on the stock with a target price of around 3,920. Another stock, and I mean, you can see like LTI and Tech Mahindra, clear rally in IT stocks. Tech Mahindra was one of the top gainers among those IT stocks. The stock rallied almost 4%. On the price charts also, you know, it was able to surpass the 40-day exponential moving average, which by the way, if you ask a technical analyst, it's a bullish signal, and closing above that 40 DEMA could suggest that there is more upside remaining for the stock. Another stock was Hindalco. Hindalco extended its winning run to about 3 sessions. It was among the top gainers in the Nifty metal pack. Other gainers were Tata Motors, which rallied about 2.82%, and LTI Mindtree, which was up 2.72%. Now, among losers, Shweta, Bajaj Finance was the top loser in today's trade. The stock is now on a 2-day losing streak, and it has been in a correctionary phase ever since its Q2 report card came out. In the last 1 month or so, the stock is down about 10% or so, and even the brokerage reports coming out post the Q2 results suggest that perhaps the valuations are expensive, and then we of course know that the NBFC sector as a whole is gearing up for the entry of Geo Financial Services. So there is going to be increased competition in the segment, and that's why we are seeing some bit of a correction playing out in Bajaj Finance. IndusInd Bank also, IndusInd Bank, by the way, touched a new 52-week high in today's trade. It opened about 1% higher. Thereafter, we saw some bit of a profit booking.
Profit booking, basically.
Profit booking take place, and there was no major trigger as such for the stock. So yeah, perhaps it was profit booking. It ended about 1% lower. Power Grid Corporation was another stock which ended, which by the way broke its 4-day winning run to end about 1% lower. Again, I think it's profit booking that's taking place over here because there's no new major trigger. The other two spots you see MTR because there were only 3 stocks in the Nifty pack that only declined today. The overall breadth is overall breadth is favoring bulls for now.
All right, and that of course are top gainers and losers. Suyash, good to have you here on the show. I think with that we've come to the end of this bulletin. We'll be back after a short break.
Israel at War. The big coverage only on News 9 Live.